I mean, do you think that inflation has peaked?
Well, yeah. We think it's likely peaked. Obviously, it's difficult to know. We still have some supply chain issues out of China and so forth, but certainly it's hard to believe that the actions taken so far haven't taken the edge off the demand side already. I mean, you look at consumer confidence. Another way of looking at it is just think about um, uh, global liquidity conditions have come back, and we've basically seen the Fed act very aggressively and trying to dampen some of the optimism in some of the asset markets, and yeah, so generally. We've seen that starting to happen, and one of the key examples, not just the equity weakness, but also we've seen it in other asset markets such as crypto, for instance, over the last week. We've seen that really collapse, and all of these things will add up and take the sting out of inflation over the next quarter, in our view. Yeah, it's going to be an interesting period going forward.
It'll take the sting out of inflation, but will it take the heat that we've still got there, particularly from the demand side of the equation? That's the question a lot of people are asking at this point in time. We know that financial conditions have tightened quite a lot, but is that sufficient to go and really start to go and slow down that demand we're seeing at the moment?
Well, the 2% target that the US has does seem somewhat unachievable in the medium term. So if they're really sticking to that over the next few years, then the answer is rates are going to keep going up. We're optimistic that once something breaks properly, then they will then take their foot off the pedal somewhat. And obviously it's hard because you were in the political sphere here, and we're in the realm of how the Fed is structured and what their true mandate is. But we tend to suspect that we're seeing the first signs of things breaking. Although crypto isn't typically included in financial conditions indices, sorry, how many people have we seen on social media demonstrating their purchasing power or wealth on the back of crypto gains?
I think 1.7 trillion US dollars worth has been lost in market cap in this drawdown.
So if you unwind that trade, then that unwinds some of that spending as well, in our view, even though it's not traditionally included in economists' financial conditions indices. We'll be interested to see whether that breaking actually breaks the back of inflation. We suspect that might be the first, shifting the momentum the other way, in other words.
Okay, so let's think about the other things that are happening on a macro level that could shift as well. We've got war in Ukraine still ongoing.
Yep.
That is putting a lot of pressure on energy prices in Europe in particular. We had the Bank of England's governor last night warning about, the very real impact of rising energy costs. Could something break, hopefully in a good way there, that could change the dynamic further?
Well, something could mend there because it's already broken so hard. And actually, when we look at the news flow now, people are talking about dare I say, a potential Ukrainian fight back that is probably more successful than anyone conceived of at the outset, or even a month ago. So really, what's most likely, or potentially what's becoming slightly more likely than a few weeks ago, is some sort of peace settlement, because no one wants an outright Ukrainian victory. That brings huge geopolitical instability in the region, given that we're dealing here with someone with nuclear weapons, so it's in no one's interest for Russia to lose completely.
We haven't talked about it a lot, but Sweden and Finland moving to join NATO as well. I mean, unprecedented times still on that front, but what you're saying is that might mend slightly.
Yes.
And then where else do we look around the world?
Basically, Germany's not forced to cut Russian supplies immediately.
So that alleviates some of that pressure.
Exactly. At the margin, right? And that's what the market's about, margins. It's not necessarily about absolutes.
Nadine, in answer to your question, I think you've got to look towards what's going on in China as well. The zero COVID policies continue at this stage. There's a lot of optimism about reopening, particularly in Shanghai at the moment following lockdowns. But is it realistic to imagine that we're going to go and have activity return to normal levels if you're not going to have any zero tolerance at all to COVID?
Yeah. So interesting messaging coming through in the last while. And we were just talking off air about it. So really, what they're prepping for is, they're going to have to aggressively stimulate. Unfortunately, how else are they going to reach the 5.5% target? It's an absolute impossibility without enormous, probably construction, repairing the housing market. Now remember, Chi's probably more vulnerable than the Western media is willing to discuss. November's the key deadline. So really between now and then, our view is we're going to see aggressive stimulus because his political survival is at stake.